Yeah, good morning, everyone. So yesterday again we saw US market coming off on concerns of recessions coming near, wherein the economic data and results of the corporates are reflecting that the slowdown is coming in the US, and which has got reflected into the performance of the indices over there. Today morning, US markets are more of a positive, whereas Asian markets are indicating some positive trends across the board. Um, so it's such quite possible that we may see some bounce back in today's trade. Uh, Apart from that, even oil has also bounced back by almost around $2, and the iron ore is up by around 1%, and steel is more of a flat in China. So overall outlook looks comparatively positive for today. I'll request technical team to take up from here.
Sure. Thank you, sir. Good morning, all of you. This is Swati. Today, the Nifty is likely to open on a flattish note, and we are likely to witness some sideways momentum during the day. On the technical front, yesterday Nifty has managed to kept a positive closing above 18,100 level, which gives some sort of a relief sign. Any breakout of 18,120 to 140 levels today will extend this pullback rally towards 18,200 to 18,270 levels on the high side. Whereas on lower side, 18,000 will act as a psychological support level. Unless and until it stays above that level, this pullback rally is likely to be witnessed on the higher sides. Any move below 18,000 levels, then only we can witness again some sort of a profit booking, which might drag the Nifty towards 17,940 to 17,900 levels. So the view is little bit cautious, but pullbacks really cannot be denied, because at every support level we are witnessing some sort of a buying, whereas on the high side, on every resistance level, it's facing a selling pressure as well. So which gives the indication that the Nifty is just consolidating within a very tight range of 18,000 to 18,200 levels. Any breakout on either side will decide the clear trend of the market. Coming towards the Bank Nifty, for today intraday purpose, Bank Nifty has a immediate support level at around 42,000 levels, will act as a strong support level. Any move below that level will witness some sort of a profit booking, which might take a Bank Nifty towards 41,800 levels. On the higher side, 42,500 is the first resistance level. Above that level, we can witness a positive momentum towards 42,700, 42,800 on the high side. Coming towards the Nifty Finance, for today intraday purpose, 18,800, 18,900 are the resistance level we need to keep eye on it. Whereas on the flip side, 18,670, 18,600 are the support levels we need to watch it. Stock specific, as of now, Chambal fertilizer really doing very well. Yesterday we have seen that the fertilizer stocks was performing well. Fact was giving a very good amount of a positive rally on the higher side. On the technical front, Chambal fertilizer is very well placed about 50 DMA. Which gives a strong indication on the higher side, and it might touch the fit of 100 DMA, which comes to it around 315, 330 levels. So one can take a long position in Chambal fertilizer at the current market price. Stop loss can be kept at 300 for immediate target of 320 to 330 levels on the higher side. That's it from my end. I request derivative team to take call forward.
Yeah, thank you. Good morning, everyone. So on the derivative front, as we said yesterday also, that Nifty is likely to remain the new range of 18,050 to 18,200 level on the spot front. Currently, we witness that Nifty managed to hold that support strongly in yesterday trading session, while against that on the OI front, we are seeing that major portions of OI got liquidated in yesterday's session from 17,900 to 18,200 strike, while major portions against that got added at 18,100 level. So 18,100 to 200 will act as an important range for the market currently. So till the time for next 1 to 2 trading session, we expect 18,200 to 18,050 would be the new range in the market. Once if it gets broken, then again the momentum will be pick up in the market. Till that point of time, we expect the market to remain a range bound in coming trading session. While the positive thing that happened in yesterday's session was PCROI. PCROI yesterday gave closing at 1.16 level. Well, from many times I am saying that the PCR is having support for supportive range of 1.15 to 1.08 level. Exactly on the supportive level, it got closed. So we expect some pullback again in today's trading session. While against that, we are also seeing that India VIX dragged down sharply in yesterday's session and gave closing around 14 levels. So India VIX is not giving up move. Once if India VIX starts giving up move, at that point of time, we might expect some cautious momentum in the market. Till the time India VIX is staying low, we expect the buying trend to be seen in selective stocks and stock specific market will be witnessed currently. So as per the overall data, we expect some buying momentum in the market with the support of 18,050 level. While as per stock specific, we expect Polycab, ONGC, and Bosch Limited. These three counter looks positive in today's trading session. That's it from the derivative front. Thank you.
Good morning. AU Small Finance Bank result was above expectation, mainly led by lower credit cost, which came at just 0.2% against expectation of 0.4%. Slippages also declined sequentially to 1.6% versus 2% in September quarter, and that too in a seasonally tough quarter. So that is commendable. ROA remained healthy at 2%. Loan growth was also healthy at 7.5% sequentially and 38% year on year. However, some decline in spreads as well as cost to income increased, which led to profit before provisioning growth of 21%. Stock seems fairly valued at a PE of 23 times FY24 EPS, and we expect bank to compound its earnings at around 25% CAGR going forward. So that kind of return can be expected from this stock. Canfi Nome's result is marginally above expectation, again led by lower credit cost. Loan book growth was at 4.5% sequentially, 20% year on year. However, if we look at the disbursements, they were flat year on year. So in coming quarters, it is possible that loan book may witness some slowdown. Also, spreads came down to 2.24% versus sequentially 2.51% because of funding cost increase. And we expect that probably one more quarter of this decline can continue, and after that, spreads can stabilize. ROA remained healthy at 2.2%, ROE at 17%. Stock is trading at 2 times trailing price to book. So from long-term perspective, stock looks positive. ICICI Securities result was in line with expectation. Revenue grew 2% sequentially, EBITDA 5% sequentially. Stock seems to be fairly valued at 14 times trailing earnings. We are neutral on ICICI Securities. Thank you.
Good morning. LTT has posted its result yesterday, and the company has posted marginally below expectation set of numbers for the quarter, with CCQOQ revenue growth coming in at 0%. Growth in the quarter was muted due to seasonality and higher than expected impact from furloughs, especially from the plant and engineering segment. EBIT margin improved by 50 bips QOQ and came in at 18.7%. For FY23, management has given a USD revenue growth guidance to be around 15% organic in CC terms, with the growth coming back from Q4. On revenue, with the acquisition of SWC, the company reconfirm its aspiration of $1.5 billion run rate by FY25. Acquisition of SWG will impact the margins of Q1 FY24 by 180 to 200 bips. Organic revenue, organic business margins is expected to be in the same range. However, with operational efficiency, management aspires to reach back to an 18% margin by H1 FY26. Stock is trading at 34.2 times FY23 EPS. Outlook is near-term negative. Coforge has posted marginally below expectation set of numbers for on the revenue and the margin front. Order intake came in at $345 million, and executable for next 12 months came at $841 million. Looking at the good deal wins, management indicates to have sustained robust growth in Q4 and growth coming and the coming year, and has upgraded the revenue guidance to 22% growth from previous guidance of at least 20% in CC terms. Stock is trading at a PE of 24.4 times FY24 EPS. Outlook is neutral. Thank you.
Yeah, good morning. Hindustan Zinc reported inline set of numbers. Revenue was down sequentially and year on year, owing to lower zinc LME, lower lead and silver volumes, and lower gains from strategic hedging, which was partly offset by favorable exchange rates. Zinc cost of production for the quarter stood at $1,293 per ton, up by 13% sequentially, 13% year on year, and 3% sequentially. The cost of production was affected largely due to elevated coal prices and input commodity inflation. And the company had lower domestic linkage coal availability. The management expects the coal linkage to improve from February, and from February the company will use low cost inventory, which will aid in margins for the next quarter. The company has also acquired a 100% stake uh, in Zinc International, which is the subsidiary of Vedanta, for a consideration of uh, $2,981 million in a phased manner. The acquisition will be done through Hindustan Zinc's wholly owned subsidiary, which will be incorporated overseas. Uh, the management has maintained its guidance for mine metal production to be in the range of 1 million ton, and the zinc cost of production to be around $1,250 per ton. Post the acquisition will take around 18 months to complete, and post the acquisition, the management expects to produce around 2 million ton of mined metal in the next 4 years. Apart from this, the company has also approved the third interim dividend of rupees 13 per share. The record date is January 30. So this is neutral for the we are neutral on Hindustan Zinc. Thank you.
Good morning. Yesterday, Hindustan Unilever Limited reported the results, and the results were broadly in line with the expectations. If you look at the volumes, were at 5% was with the 5% growth, which is in line with the expectation of 4.4%. And revenue reported at 15,228 crore with 16% YOY growth. EBITDA margin reported at 23.2% versus the expectation of 23.4%. And overall, if we look at the FMCG industry, it has witnessed the unprecedented inflation that has impacted the overall volume growth. However, there were few commodities which has softened, notably palm oil. And if we look at the FMCG growth in Q3 FY23, it has because of the less severe winter, it has had impact on December 22 growth also. So urban markets have continued to lead the growth, while rural markets is showing some signs of improvement and with the sequential growth, and rural slowdown is bottoming out. In the segment-wise performance, home care, beauty and personal care, and food and refreshments has delivered the growth in terms of 32%, 10%, and 7% respectively. During the quarter, other income was higher on account of higher treasury yield and dividend from subsidiaries. The management is focusing on to ensure the price value equation for a consumer and building back the gross margins. Overall, the company has outperformed the industry growth. and the cost inflation is coming off gradually, but higher royalty charges will act as a short-term negative. So overall, the outlook is neutral over the near term. The Hatsun Agro Product Limited also reported results, and the results has improved for the quarter. Revenue reported at 1,695 crore with a 7% YOY growth. EBITDA margin reported at 11.2%, and the stock is trading at the PE of 117 times to TTM EPS. Also, Asian Paints Limited reported results which were below expectations. It was largely because of the muted volume growth and the value growth of 1%. However, if we look at the 3-year CAGR volume growth, it stands at 16% and value growth of 17.6%. The EBITDA margin came at 18.7% versus expectation of 18.3%. It has added 10,000 retail points in the last 9 months, and it has almost 15 lakh retail points across the country, which stands out in the industry in terms of its presence. The management expects EBITDA margin to be in the range of 17 to 20%, and a marginal improvement is expected in Q4 FY23 due to a better product mix. Also, the management is going to take a decision on capacity expansion based on the last 10 years growth. Currently, the stock is trading at a PE of 54.1 times to FY24 EPS, and we are long-term positive on the stock. Then Megmoney Finechem Limited has reported results, and the results has declined for the quarter. Revenue reported at 537 crore with a 27% YY growth and 3.2% sequential degrowth. It has witnessed volume growth of 18% on a YOY basis. EBITDA margin reported at 31% versus the 32.5% in the last quarter. The margin was slightly lower on account of high raw material cost compared to realization. Also, the company has announced the interim dividend of 2.5 per share. As per the recent announcement, the company has approved the expansion of additional capacity of 45,000 tons per annum production capacity of chlorinated polyvinyl resin plant at Dahej. And it has achieved the 70% capacity utilization of 30,000 tons per annum of CPVC resin as on December 2022. So this is marginally positive for the company. And the capex of 250 crore for this expansion will be sourced from internal accruals and borrowed funds. Stock is currently trading at a PE of 13.2 times to DTM EPS, and currently we are neutral on the stock. We will continue to monitor the caustic soda issue realization. Thank you.
Yeah, Havells reported numbers, and numbers were marginally ahead of expectation, mainly driven by their wire and cable divisions, whereas other divisions had seen slower growth. Even Lloyd has seen good growth, but margin continued to remain under pressure. Going forward from here, company is seeing that the cost is coming off, and company has taken some price increases further in they had taken some price increases in Q3, which will have some positive impact on Q4. The volume revival will is not being seen much in the other segment like lighting and even the consumer durable segments. We need to wait for that and see how it revives over a period of time. But near term, this though there could be some increase in the margin, but the growth will be slower. Stock is somewhere trading at around 47 time FY24 EPS, which is their broader range of anywhere between 45 to 50. So valuations are reasonably okay. overall outlook from the long term is positive, but short term the stock may remain sideways. Then Polycab also came up with the number, and the numbers were above expectations. They are mainly into the wire and cable, which has done comparatively well. Company had seen even margin expansion also in this quarter, wherein they had reported margin of 13.6, whereas their guided range is somewhere around 11 to 13. So it is higher than the guided range. As such, in the wire and cable, outlook comparatively is positive as compared to other consumer durable items. So here again, the valuations are at around 31 times FY24 earning, comparatively bit on the higher side of their range. And in long term, the outlook for the Polycab continue to remain positive. Then a few news item like Sun Pharma has done an acquisition. The large acquisition has been done almost at around $570 million, or almost at around 3,500 crores equity, 4,000 crores acquisitions. Revenue of that company is very nominal at around 31 million. So the acquisition is for the specialty drug in derma segment, which will be is into the phase 3 trial right now, and which will is likely to get positive result, and if that positive result comes, then can give a good boost to the company's performance. So near term will not be getting reflected into the financials of the Sun Pharma, these acquisitions, whereas the money deployed will be large, so there will be some cost on that account. But overall seems from a long-term perspective, this acquisition, if materialized positively, then can act as quite positive, as their specialty pharma anyhow is doing very well, and now they are adding up these with acquisitions to this portfolio. So long-term can act as a positive for Sun Pharmaceutical. Then HIL, that is HIL Limited, the MD has resigned, and we had seen that this company has done very well under the leadership of this MD, Mr. Chaudhary. And with leaving this company, we may have some negative impact on HIL Limited. Then Jubilant Food has announced some aggressive expansion plan for Popeye, which is more of a competitor to KFC. They had got initial good success for Popeye, and now they are expanding that brand into India. They had planned for around 40 to 50 new stores in next 12 to 18 months. So that can act as a positive for Jubilant Food Limited. Then results for 24th, that is Tuesday. CG Power is likely to report numbers, and numbers are likely to show improvement, wherein revenue can grow by around 15% year on year, but EBITDA margin can expand further year on year by 100 pips, and can grow by 24% year on year. Chariot Hotel, first of the hotel, is reporting numbers, and here the numbers are not so encouraging, as the expectation from the hotel industry is very high. Though quarter on quarter revenue will grow by around 16% and EBITDA by 25%. But if we compare the figure of these expected figures of this Q3 as compared to pre-COVID Q3, the difference is not much. Against pre-COVID number of 278 crore, this year they are expected to report 288 crore, and a bit of 112 crore. Against that, they will be reporting 114 crores. So that do not indicate any great growth as compared to pre-COVID level, whereas the prices has moved up very fast. So need to be careful in Chariot Hotels, or to that extent other hotels as well. Then Colgate-Palmolive is likely to report declining numbers. The growth seems to be very minimal, wherein year-on-year growth of revenue of around just 3.4% and EBITDA is likely to remain flattish. In HDFC AMC is likely to report number. Here the numbers seems to be more of an okay set of numbers, wherein quarter-on-quarter revenue growth of 7% and EBITDA growth of around 6%. Indus Tower is likely to report declining set of numbers. Kaveri Seeds number will be more of a flattish year-on-year. This is basically an off-season period. Key period is their June quarter, wherein the bulk of the revenue and profitability come in that quarter. Then Macrotech developer is likely to report numbers. Here they had already announced the pre-sales numbers, and which were more of a down quarter-on-quarter. Last quarter they reported pre-sales number of 3148 crores, which against that December pre-sales number were 3035 crores. So more of okay numbers which has already come, so may not have any impact of the results on the prices of the shares. Then Maruti is likely to report number. Here the margins are expected to be flattish quarter-on-quarter. We already know the volume figure and revenue, so only margin need to be seen, and which is likely to be more of a flattish. So result is likely to be okay. Then Pidilite is also likely to report more of a flattish number. Year-on-year revenue growth of 9% and EBITDA growth of 4%. Then Sona BLW is likely to report number. Here the numbers are likely to show improved set of numbers, wherein revenue is likely to grow by around 35% year-on-year, and PAT is likely to grow, EBITDA is likely to grow by around 40% year-on-year. So result is likely to show improvement. Sona BLW. Then Stride Pharma is likely to show better numbers. The margins are showing improving trend both year-on-year and quarter-on-quarter. Quarter-on-quarter, the margins are likely to improve by around 200 basis points. We need to be watched this stock as the performance of the stock in the past was very bad. If suppose this type of result comes, then the stock can perform. So need to be watched. Stride Pharma Science Limited. Supreme Industry likely to report okay set of number. Here last quarter company faced decline in PVC prices and inventory loss, which is not there in this, and that's why the margins is bouncing back. So more of their sustainable, they are still be lower than their regular margin of around 14-15%. They will be reporting 13% margin in this quarter. So we still need to catch up. Revenue growth is expected at around 8% year-on-year. Then TVS Motor is also likely to report more of a flattish number, wherein quarter-on-quarter margins are likely to remain more of a flattish. Volume figure already known. So that's all from us, and I'll request commodity team to take up from here.
Yes, thank you, sir. Good morning, everyone. In today's session, one can buy gold around 56,600. One should remain long as long as holding above 56,550, and on higher end 56,800 to 57,000 could be the possible targets. In silver, we expect prices to test 69,000 to 69,300. Prices have opened gap up, so we recommend to buy on dips. So one can initiate a buy around 68,300 to 200, and look for targets at 69,300. Crude oil prices are expected to trade positive. So buying around 65.50 and maintain a stop loss of 64.70, On higher end, 66, 50, 6700 seems to be the ideal target. In natural gas, prices are continuously drifting and weak below 290. So 265, 260 seems to be the supportive zone. But however, prices are not sustaining above 265. So, however, prices are oversold. So, we recommend to avoid the counter, as it is not as advisable to sell at these levels. So, maybe a pullback till 280 to 90 could come, but one should wait for a reversal sign. So, avoid at this moment. Uh, Copper to 773, 774 is a good support area. So as long as holding above 773, one could buy. However, view remains cautious if closes below 772. So initially, one can trade in the range of 780 to 772. Zinc prices are expected to edge higher and test 300 on higher end. So buying around 295 and maintain a stop loss of 293. Mm, Aluminum, one can initiate a buy, and we expect 222, 223 on higher end. So buy with a stop loss of 219. And in USDNR, we expect prices to test the support zone of 81 to 80. This is a support area, and from there, one can expect a pullback. So one can trade accordingly. That's it from me. That's it. We conclude the call. Yeah.